Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SENSATA Technologies Holding PLC quarterly report. SENSATA Technologies offers a diverse range of products and services across various industries. The company's key businesses include sensors and sensor-rich solutions for mission-critical systems, electrical protection components and systems products for automotive, on-road truck, and construction industries application-specific sensors and electrical protection products, power conversion systems, battery management systems, operator controls, high-voltage contactors, solid-state, relays, bimetal electromechanical controls. The company serves a wide range of customers across various sectors, including automotive, aerospace, defense, agriculture, control, appliance, medical, energy and charging infrastructure, data/telecom, and construction. The SENSATA Technologies Holding PLC (SD) stock price has remained relatively stable over the past year, experiencing no significant changes beyond a 0.69% decrease. Several key events contributed to this stability, including positive earnings reports, routine corporate actions, and analyst coverage that generally lean towards hold or buy. The company's ability to exceed revenue guidance, improve its adjusted operating margin and free cash flow, and reduce leverage in its Q4 2024 earnings report helped stabilize the stock. Additionally, SENSATA's diversification into industrial and aerospace applications, as well as its market leadership in the automotive sensor industry, provided a foundation of stability. Overall, these factors have mitigated potential negative sentiment and contributed to the stock's overall stability. The primary drivers of revenue growth or decline can be identified from the financial summary provided. On one hand, revenue growth is driven by organic growth in performance sensing net revenue, content growth in HVAC and aerospace end markets, as well as gains on commodity and foreign currency forward contracts. On the other hand, revenue decline is attributed to several factors including loss on debt financing transactions, net periodic benefit cost, disposals, divestitures, and unfavorable product mix. Specifically, the Insights business and magnetic speed and positioning business have experienced declines in revenue due to divestitures. The impact of changes in foreign currency exchange rates has been neutral or mixed, while acquisitions and divestitures are part of management's strategic initiatives to position the company for future growth. Overall, these factors highlight the complexities involved in driving revenue growth or decline in a business setting. Net income and profit margins experienced fluctuations between 2024 and 2025. For the 3 months ended September 30, 2025, net income decreased by $148,427 compared to a loss of $244,606 in 2024. However, for the 9 months ended September 30, 2025, net income increased by $95,026 compared to a loss of $47,032 in 2024. Profit margins also underwent changes across different segments. In the performance segment, profit margin decreased by 0.3% for the 9 months ended September 30, 2025, while it increased by 1.5% for the 3 months ended September 30, 2025. The Sensing Solutions segment saw an increase in profit margins of 1.7% and 1.1% for the 3 and 9 months ended September 30, 2025, respectively. The reasons behind these changes are multifaceted. A realignment of segment operating income definition contributed to the fluctuations. Additionally, charges related to clean energy policy and emission regulations led to an operating loss in Q3 2025. Furthermore, a non-cash goodwill impairment charge was recorded due to the impairment of the Dynapower reporting unit. However, cost savings from restructuring plans and decreases in product line and product lifecycle management charges also contributed to the changes. The company is indeed generating positive operating cash flow. The financial summary explicitly states this, and the data on page 5 and page 41 of the report confirm it. Specifically, for the 9 months ended September 30, 2025, net cash provided by operating activities was $420 million, indicating a significant increase from the previous year's figure of $380,834. This trend suggests that the company is successfully managing its finances and generating sufficient cash to support its operations. The company's debt level has experienced a minor fluctuation. While the current portion of long-term debt decreased from $2,400 $414 to $2,234. The total debt and finance lease obligations increased slightly from $3,199.5 million to $3,203.2 million. Finance lease obligations also saw a decrease from $20,984 to $19,596. Interest expenses have generally decreased over time. The interest expense has dropped from -$38,942 to -$37,715, and by 1.6% from -$38.9 million to -$37.7 million. Additionally, the net interest expense decreased from $102,800,000 in 2024 to $99,300,000 in 2025. The performance of various regions and segments in terms of cash and cash equivalents has been mixed. The Netherlands stood out as a top performer, experiencing a substantial increase from $256,300 million to $575,400 million between 2024 and 2025. In contrast, China struggled with a significant decline from $272,200 million to $133,500 million over the same period. While the United States and other segments also saw decreases in cash and cash equivalents, their magnitude was less severe than that of China's poor performance. Management's outlook and strategy. The company is shifting its strategic focus in response to recent tax legislation, exiting non-core businesses such as aerospace and defense, and leveraging new technologies to complement existing product offerings. To improve cost structure and revenue growth, management is implementing restructuring plans, optimizing manufacturing processes, and positioning the company for future expansion through acquisitions and divestitures. Additionally, they are managing debt levels through prepayments and restrictions on subsequent indebtedness. Overall, the company aims to adapt to changing market conditions while driving growth and profitability. The company's financial summary reveals key transactions that have impacted its operations. Notably, there were no acquisitions mentioned. However, significant divestitures occurred, including the sale of the Insights business in 2024 disposals, resulting in decreased net revenue for the 3 months and 9 months ended September 30, 2025, exit of the Spear Aerospace and Defense business in the third quarter of 2024. These transactions demonstrate a strategic shift in the company's focus and operations. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In recent years, the company has paid out significant amounts in dividends, with aggregate cash payouts totaling $17.5 million for the 3 months ended September 30, 2025, and $52.9 million for the 9 months ended on the same date. Additionally, the company has also engaged in share buybacks, purchasing shares worth $120.6 million. That concludes the financial summary for SENSATA Technologies Holding PLC. Feel free to comment below, and I will be happy to answer them when possible.